This episode of My Two Satoshis is brought to you by BitGet.com. BitGet is one of the fastest growing derivatives exchanges with 1.5 million users worldwide. Available to U.S. citizens, BitGet offers USDT margin trading and one-click copy trading. With over $5.6 billion in trading volume per day, you should start trading with the fifth largest global crypto exchange today. BitGet.com. Link in the description below.
This my two Satoshis. Who need 2 cents when they can get double from stacking Toshis? Yeah.
It's your boy Crypto Blood. Welcome to another My Two Satoshis crypto news video. Today, we're going to look at some crazy statistics or a tidbit. If you would have invested $100 in Bitcoin and back in 2011, I'm going to tell you in this video how much you would have today. Now, we know that's hindsight and all of that, but there's a message and a lesson to be learned through this exercise, this thought exercise. So we're going to take a look at that today. In addition to that, last week, someone bought a whole bunch of Bitcoin, $1.6 billion worth, and can maybe take a look into this out of Yahoo Finance as they asked that question, who would put 1.6 billion into Bitcoin at these levels unless they thought it was going higher? It had a very strong conviction that Bitcoin was going much higher from here. And then lastly, we've got something out of CoinDesk. Yes, Stripe is hiring a crypto team 3 years after ending their Bitcoin support. I don't know if many of you remember this, but Stripe did support Bitcoin for a very brief moment. So it's interesting that they're jumping on the bandwagon late, in some people's eyes, late back to the game. So we'll take a look at this and I'll give you my two Satoshis on what I think this means for more adoption and more onboarding of people into the crypto space. If Stripe is allowing and more crypto friendly, then that will allow more dApps and apps to have that fiat to crypto bridge be much more seamless. Stripe is one of the biggest payment processors or merchants in the game. So having them support Bitcoin and cryptos is a very big deal in my opinion. So we're going to take a look at all three articles today on this episode of My Two Satoshis. Let's get it.
But before we start, if you guys find these types of videos informative, make sure you like, share, and subscribe, and click that bell to receive more videos like this.
So of course, before we do that, we got to take a look at that heat map. Bitcoin is down slightly today. It looks like a slight mini correction in the markets. Nothing major at this point, but Bitcoin is down 3.4%. It is trading at $55,000 and 422 bucks. We've got Ethereum down just 0.5%. It's trading at $3,400, almost $3,500 to be exact. And Binance, though, Binance, DOT, and Solana all up today, but Solana is up 5.7%, but it's taking a big hit. You know, it's not doing that well in the grand scheme of things. If you zoom out maybe a week or so, you'll see that it really hasn't gone anywhere, just kind of treading water. But I still think Solana is one of those gems that you need to be looking into buying. And I actually did a sponsor review of a token that I said was a hidden gem. That's what made me think about it. It hasn't been released yet, but you will see this video in the coming days. It is free ton network. I don't know if you guys remember the Telegram open network. Well, they're back. The community has relaunched that project. So we'll take a look at that in a couple days. So watch out for that free ton video. All right. Technically speaking, though, we have Bitcoin looking pretty strong. Like this move here, when Bitcoin took a deep dive, bounced off the top side of that channel, came down in the channel. That's when I was really worried. But then we saw a full retracement here. That's a strong move up right there, ladies and gentlemen. That is a very bullish sign. So yeah, we're seeing a slight correction right now, but that's, hey, after this move, you might see some pause in that momentum. I mean, this is a steep trend line here. All right, so we've broken that trend line. You must know that we're going to maybe take a move down to literally this area, right? Previous resistance equals future support. So now this area of $52,000 should be in base for us. So you could see a breakdown here and then maybe a move back up like that. So that's the area you want to watch. $52,000 Bitcoin as an area for support for us now in the markets. And if that doesn't hold, you see the line at $50,000 Bitcoin. That's the next level that should be some area of support for us. And this is all in short term. Tomorrow there could be some crazy, horrible news that comes out. United States plans on banning Bitcoin or something crazy like that, and of course we'll take a dive. So you got to keep all that in mind. All this TA is just based on current sentiment in the markets. It cannot predict future sentiment from fundamental events that may occur. We can't see that stuff, right? So you always got to keep that in mind and take that with a grain of salt. But let's take a look at what Stripe is doing. Okay, that is the big payment processor. Got very popular with the app Uber. Uber was one of the bigger companies to first adopt Stripe, I believe. Could be wrong, but Stripe is definitely used across many platforms, many industries, tech-heavy industries for sure. But they are hiring a crypto team after 3 years of ending their Bitcoin support. So it looks like it's doing a full 180 on us. So they're assembling this crypto engineering team to chart its future in digital assets. And so this new department / team was described in LinkedIn as being run by Guillermo Poncin, Stripe's former head of engineering for banking and financial products. So he is looking to hire at least 4 staffers to help plot Stripe's crypto strategy. Those engineers will design and build the core components that they need to support crypto use cases. Stripe's relatively modest hiring push comes amid a surge in crypto payments integrations across online retailers and even social media platforms. So Stripe, the crypto startup behind Twitter's new Bitcoin tipping feature, is preparing to release its payments API in an aggressive bid for mass crypto adoption. So Stripe needs to definitely pivot here, because this is the future. Without a shadow of a doubt, cryptos in the form of payments and having that payment rail available is necessary for you to survive. Okay, the days of debit cards and credit cards over that infrastructure, that old antiquated network, will not be around in another, I say, 10 years easily. I mean, I remember this back in 2014 when Stripe came out and said they were supporting Bitcoin. But after that crash, it's been so many crashes, but there was a huge crash in 2000, late 14 going into 15, that really kind of changed their sentiment. A source over at CoinDesk is telling us that Stripe never left crypto. So in recent months, it has shown increasing interest in non-fungible tokens. So one thing they want to do this go around is not pick favorites. I've told you guys this so many times before. Bitcoin is not the best for payments, a payments coin, not at all. I think a payments coin needs to be much faster without needing a second layer to scale it. There are so many out there that are able to do this, so why not use those? Any of these, like even like Dogecoin, is actually a great coin for payments. It's inflationary, meaning it has, I think, 5 million coins created every year. So that keeps the speculative aspect or characteristic of that coin down over time. It smooths that out so people won't be hoarding the actual Dogecoin, instead spending it as they should be. You want money velocity with that, whichever coin you use, to be a healthy at a healthy level. Okay, you don't want people to be holding it and not actually circulating the coins around, and that's what would happen if you were to see Bitcoin become adopted as a main currency for a country or something like that. It won't work. I'm telling you guys, it will not work in that capacity. Bitcoin is great for a store of wealth. You want to save that for a rainy day, or again, I've said this in many of my videos, you want to use that as a means to transfer from one asset class to another. If I want to go, let's say 5 years now, got my Bitcoin chest, it's worth even more money, and I want to go buy some land or something, that's a good transfer. But using Bitcoin for coffee is the stupidest thing you could ever think of doing. And so they're going to try to take a more multi-coined approach this go around. Stripe, that is. I don't know if you guys remember, they pledged to possibly integrate Stellar Lumens back then in 2018. On that announcement, Stellar went up like 20% that day. That's where we are with that. Stripe, it will be increasing its footprint within the crypto community, and it looks like even possibly NFTs. So we got to watch out for that. And so next, I want to talk about somebody bought $1.6 billion worth of Bitcoin on last Wednesday. The obvious or easiest dot to connect in this news article here is that this is very bullish for Bitcoin, right? I said that at the intro. However, there may be more complex answers when one zooms out and looks at the overall picture. So once that involves capital markets beyond the relatively small world of crypto, some of the clues about why and who may be found in what, where, when, and how this enormous Bitcoin trade happens. Let's talk about what. As one of CoinDesk's analysts said, a buyer or a group of buyers entered an order on a centralized exchange for $1.6 billion worth of Bitcoin. To put it in perspective, it's roughly 4.5% of the average daily volume in the Bitcoin spot market over the past 2 weeks. So that's pretty sizable. That much supply hitting the market in under 5 minutes is a lot to jam into any one exchange or even three. It almost immediately sent Bitcoin prices skyrocketing 5% to roughly $5,500. So that's what the actual price move we saw last week. That was what it was. So they're saying in this article that they don't think this was an actual long-term buyer here. Maybe some manipulation, because they're saying that a long-term buyer perspective would be more careful. And if their goal was to get in at the best possible price to mitigate the risk of slippage, they wouldn't have done this move. For example, if you take a company like Michael Saylor over at MicroStrategy, who purchased $450 million, it was done in a way where they trickled it in, and they did this over the course of 5 months, not 5 minutes like we saw last week. So it seems like that person was in a big hurry to get that trade done. So where did this all happen? So trying to pin down the exchange that took on this trade offers some hints about the buyer's motivation. Of course, the price of Bitcoin on Coinbase relative to other exchanges rose sharply as the trade was underway, leading some to speculate that the U.S. exchange was a platform where the transaction actually happened. However, a little more digging into the data places the trade in Asia. So it looks like it would have come from Binance, Whaaat, and Bybit. While not technically based in China, those have had ties to the country, where yet another crackdown on cryptos was recently announced. So wow, someone just needed to get some Bitcoin. This is interesting. I'll leave a link to this article so you guys can read deeper into this. It's pretty lengthy, but man, definitely did bail Bitcoin out, technically speaking, forming a head and shoulders. So I don't know. You guys let me know, what do you think that was all about? 1.5 or $1.6 billion just smashed into the market. No cares for slippage or anything like that. So now they're trying to, maybe correlate some correlation here. They're saying it's kind of a coincidence that 2 days before the actual transaction took place, this company called Fantasia, a real estate developer based in China, actually missed bond payments of $206 million, which led to a downgrade in their credit score. And then you had another developer go miss a payment as well, Cynic. Both of those definitely pale in comparison to Evergrande. However, you had another company, I can't find the name right now, but they decided to go private, which took their stock down by 40%. So there is some contagion going on over there in China, and maybe, just maybe, someone is trying to flee the scene and move as much money over to crypto as possible. Another odd coincidence, though, is that they're talking about basically that Tether has exposure to China's real estate game, their industry. This is interesting. Is Tether the one trying to manipulate the price of Bitcoin to trigger more people, kind of like a self-fulfilling prophecy? If you can technically change the trajectory of the move short term in a particular asset, then you could possibly get other people who trade technically to follow suit, right? So this is interesting, because they're saying that Tether has a decent amount of debt, or has bought a decent amount of debt over in China from real estate companies. They didn't say they owned any Evergrande, but there are companies going bust left and right over there right now. And this is not a good move. This is not a good move if Tether is involved in some of these bankruptcies or defaults. They could be in trouble. So we'll have to keep an eye on this. I'll definitely post or pin this Tether situation for another video and keep you guys updated on that. But that's pretty crazy to me. Lastly, let's talk about this. If you would have invested $100 in 2011, how much do you think you would have had today if you fell into a coma? right? And then woke up 8 years later, or actually more than 8 years later, 10 years later. Oh, I have my Bitcoin. I put $100 in there. Well, guess what? If you would have bought Bitcoin, $100 worth of Bitcoin in 2011, you would literally have $5.6 million today. Again, this is hindsight here, ladies and gentlemen. Definitely hindsight. However, I believe there are numerous coins out there that have not even done this, but will do this same move again. So you got to be patient. This is why I say, have your actively trading portion of your portfolio. Maybe that's 10%, maybe that's 20% of your crypto portfolio. But other than that, you should have the rest of your portfolio, 80% of it, spread across. Don't roll the dice on one coin because you just think that ADA is going to be the next Ethereum killer. They stole, DPoS, delegated proof of stake from EOS, and mixed it up and did their little thing. And now they're the next Ethereum killer. Okay, spread your risk. Don't touch it. Keep $100, $200, or whatever it is, whatever a small amount is to you, 1,000, maybe 10,000. Don't touch it and just see what happens. If you spread your risk enough into multiple coins, you won't feel that itch to want to sell right away. Some of these coins are going to do very well for you and make you a lot of money. I would suggest looking at the actual smart contract coins, the coins that run the smart contracts, meaning your Solanas, your Avalanches, your EOS, your Whaaats, your Telos, your Ethereums, right? Those are the network tokens which all the other dApps and coins and stuff run on top of. You'll need those coins, those tokens to actually operate on the blockchain. Look at those smart contract blockchains as a way to pretty much win by proxy. Trying to pick the right token that's a dApp token or going to be too hard to know which one is going to actually come out on top. So why not shoot more of a shotgun approach and pick the blockchain? So that's something to think about. But I just wanted to leave you guys with that tidbit. That's pretty neat. $100. 5.7 million today. This is another reason why you don't want to use Bitcoin to buy a cup of coffee. All right. But that's pretty much it. Hope you guys enjoyed this video. Make sure you like, share, and subscribe. Click that bell to receive more videos like this. Unclick it and then click it one more time. All right. Your boy Crypto Blood. That's my 2 Satoshis. And I'm out of here. Ha!